Dividends. Nerds hate them, the common folk loves them. Earning money while you sleep gets everyone excited. It is the most important step to financial freedom and to passive income for a lot of people. This is not a get rich quick scheme. Dividends give you real, consistent, no strings attached cash, which makes them really attractive for a lot of people, especially young investors. But how can you actually make money while sleeping? How much money do you need? And is it even realistic for you? I'll break it down today and I'll share some insight and tips, mistakes, but also advice even for young and small investors. I'll explain dividends real quick. You can skip this part if you already know about it. So dividends are basically your cut of a company's profits. When you buy shares of a certain company or an ETF, they'll pay a portion of their earnings to the investors back. A lot of companies do that quarterly, sometimes it can be monthly or just twice or once a year. How much you're getting in dividends is determined by the dividend yield. Some companies have a high yield like 10% or even more. That means if a company's share price is around $100, they'll pay you $10 in dividends per year. So if the dividend yield is 10%, it doesn't matter if they pay monthly or quarterly. That means over the year you're getting $10 for every $100 you have in shares. So if you have $1 million in shares, that means you're getting 100k every year. So you can see how the rich get richer easily. But before you get too excited, you should already know that a 10% yield is usually quite high and not sustainable for a company. So those are the ones that will trap you into thinking you can earn a good dividend yield, but the company is not stable enough to keep it up over time. So rather go for a 5% yield of a stable company. And the most important thing in general is you can also go for a company that has only a 2% yield or even lower, but the important factor is if it's consistently growing over decades. That makes it a really attractive dividend company. So once you have dividends, it's literally a money-making snowball. It keeps rolling and rolling and rolling over years, and you accumulate a lot of wealth while scratching your balls or something. So let's go into the dividend strategy. Welcome back if you skipped the first part. Let's get started. The most important thing in general is keep getting information, watch a lot of videos, read articles, just build an understanding and then start building up your portfolio. Don't go straight into it, but in general it's also good if you just start, get your foot into the market. You can make mistakes, especially if you're starting with low amounts of money. But if you have a lot of cash right now, don't just dive into it. Get a lot of information, really understand and stick to one strategy. So let's get started with the strategy. Tip 1 for nearly every video I will make: use your brain. It sounds simple, but it's really not, because a lot of people don't think enough. I mean, this is your money, this is your wealth. You worked hard for that money, even if it's $100 or 1,000. This is your hard-earned money. Don't throw it around. Really think about what you want to invest and how you're gonna invest. Like I said, in this day and age, filtering information is super important. You gotta get an understanding and then you gotta apply it to yourself. A lot of things people say might not apply to your current situation. So you gotta pick and choose what will apply to you and what will not. Tip 2 is quite easy. Just invest consistently. If you put down 100, 200 or even less, just $50 a month, that's a start. You can increase the amount you're putting into it monthly over time. Just start putting consistently money into it. At the start also, ETFs are quite important, but obviously we're talking about dividends, so you want to get also into companies. So scan some companies, read articles, listen to a lot of people, and then once you truly believe in a company, if you feel comfortable putting your money into the company, you can decide if you want to put it in monthly or if you want to keep investing over time, not actually timing the market, just buying the dips. That's also a great strategy. Buying consistently some small dips, some small recessions. This can also mean in a bullish market that you are not gonna get your foot in over time. So at the start I would just get my foot into the company and then over time increase the share amount with a lot of dips that will happen. So tip 3, after you started investing consistently, obviously it's gotta be a quality company. It can't just be some tempting high yielding company. Like I said earlier, focus on companies that increase the dividend yield over time, not 5 years, not 10 years, even longer. It can be 20, 30, 40 years. It can just increase slightly, but as long as they keep growing and growing, it just shows that this is a stable company. That also means the financials are growing and a lot of people trust these companies. As I said, it's also fine just to look at analysts, but don't get into a lot of forecasts. I am also tempted. I also sometimes just run with analysts' forecasts, but it is not reliable. No one can predict the future, so you just gotta believe and trust in the companies and look at the historic financial reports. And if they keep growing, if they're consistent, then you can probably feel comfortable trusting that company, even if you don't know what's gonna happen in the future. For starters, as a tip, you can look at dividend kings. What are dividend kings? These are stocks that have increased their dividends over a period of 50 years or longer. So these are like the most reliable dividends where you technically cannot go wrong. Companies that are included in this list are like Pepsi or Walmart. You can look up the whole list. I'll put some on the screen right now. These are probably the safe bets, but you can do your own research and find other companies. Like I said, don't risk it too much. Don't go for too high yield. Start rather low because you are also low on cash probably right now, so you can increase your shares over time and grow with the company. Step 4 is super important. It is tempting to take out the cash, but what you should do is just reinvest your dividends, especially at the start, because it depends on the country you live in and the laws and the rules. I'm not from the US, I live in Germany, so I don't know how you guys handle the taxation of dividends, but we have per year about 1k for single and 2k for married people in untaxed gains over the year. So you're probably not making 2k in dividends per year anyway, or 1k. So just take it and reinvest. You can take it out technically and it is untaxed, but the smart thing to do is to reinvest, because then you're building a grower, not a shower. You know, you don't gotta flex. Just grow your dividend share, increase it over time, then your dividend will get more powerful over time. This is also the debate for a lot of people, like, I'm not buying dividends because my company should invest in themselves and grow. And yeah, technically right, I agree with that. I'm not that keen on dividends, to be honest, myself. I think for the later stages of my life I will increase my amount of stocks that pay out good dividends, but right now I want growers. But then you gotta also think, the problem with that is, what if the company mishandles that money? You know, when they pay dividends, they give it back to you, so it's up to you what to do with it. You can reinvest it in that company, in a different company, take it out, it's your decision. But if the company reinvests in themselves, you gotta trust them. And a lot of companies, like big tech companies like Nvidia, I trust them, but if it's an unproven company, that can be risky a lot of times. You know, if they don't have a high amount of free cash flow and you're investing into them, they could fall anytime. So having that dividend is like the safety net for you. Last but not least, this is a bit corny, but have fun, you know? We don't have to worry too much. Like they say, comparison is the thief of joy. You hear a lot of people like, I invested in wabbly dabbly stock 3k and now I'm a multi-millionaire. Like, first of all, a lot of people, they just straight up lying to you. A lot of trolls, a lot of people are just lying, so don't give them too much thought. And even if it's true, it's not the norm. More people lose money than make money. So if you're already making money, then you're on a good track. Enjoy it, man. Be proud of yourself. You worked hard for this. You invest your hard-earned money. Also, this is not easy. This is not luck. You chose to invest in this company. You thought about it. You watched some people talk about it. You made your plan, your strategy. You gained all the information and knowledge over time and decided to stick with a plan. You increased your money. No one else, not the company. Flip the company, man. I paid y'all, man. Google, I own y'all. I own y'all. Just kidding, but you know what I'm saying? Just have fun, okay? I'll also briefly talk about examples and just thinking about dividends in general, the strategy, applying it to real life. So let's say you want to invest and earn 1k in dividends. I'm sorry to ruin your dreams, but if you want to earn 1k of dividends per year, let's say you have a dividend yield of around 4%, that means you would have to invest 25k. So if you go further and further, let's say 10k a year. Don't need to be a Harvard student to calculate this, just add the zero. From 25k jumps to 250k. Let's say you want to earn 100k in dividends, that means 2.5 million on average if you have like a stable company. So as you can see, it is really far-fetched for now. I don't know, maybe you're rich, I don't know who I'm talking to. If you're broke like me, then it's far-fetched, but if you're rich, then why are you even watching me? Why are you wasting your time watching me? Have fun, be on a yacht, drive your Lamborghini or something. Anyway, yeah, like I said, it's unrealistic for the time, but the important thing is just to keep reinvesting, being consistent and growing your portfolio over time. Like I said, for myself, I don't pay too much mind into dividends, and it is also important for you. Maybe I should have said it as a tip. Don't focus on dividends, the dividend yield. Like I said, the company is more important. You invest in the company, not the dividend yield. If the company is stable, if they're growing their dividend, that just means that they are a consistent and good company and you can trust them. But you're not just buying Pepsi because, 4% yield. No, you're buying Pepsi because you think they will be still the same Pepsi or hopefully even bigger and better over the next 10-20 years. So also, like with everything, buy and hold. Anyway, I derailed a bit, but what I wanted to say is my strategy is buy and hold companies and growth companies right now. I have the Max 7, a lot of the Max 7. I invest halal, so yeah, boo, Muslim, unsubscribe. Okay, calm down, okay? Let's stay peaceful over here, okay? Anyway, I invest in companies that are Sharia compliant, and luckily a lot of tech companies are, so I am quite focused on tech companies, but also a lot of companies in the health sector. My strategy, I can make a whole video about it, is quite simple. I have an ETF in the background that I pay monthly in, and then I have my eye on a lot of companies where I just keep increasing my shares if I see them drop below their fair value. It's quite simple, but it's quite effective. I'm relatively new, so my track record is not proven that long. I've been above the S&P 500 for most of the time. Right now, I gotta admit, I'm below it because of the crash that's happening, the drop that's happening right now. But that's okay, because I know as soon as it jumps back, my companies will bulldoze over the S&P 500 again. So some mistakes for investing in dividends are, like I said a lot of times before, chasing high dividend yields. Don't look at the dividend yield itself, look at the company. Okay, I said it so many times, you need to understand it. I'll say it one more time. Look at the company, you're investing into the company, not in the dividend yield. Okay? Also, if your broker is trash, if you have a lot of fees, you gotta check your fees and everything. For example, I pay into my ETF monthly and I have no fees for that. If I would pay into stocks monthly, there is a fee. So these are like interesting facts to note, I guess. Also, obviously diversify. Anything can happen. With an ETF, you should be quite diversified, but still, if you just buy single stocks, which I wouldn't recommend, by the way, because ETFs, just see ETFs as free money. You're paying into that over years. Just keep it in the background. You don't have to pay that much into it, but you're making money. you're making money, guaranteed. You will make money. So have your ETF in the background, and then your stocks, keep buying increasing shares and diversify. Okay, I am, like I said, quite technology and health sector focused, but I also have a gold mine. I also invest in, obviously, like Taiwan Semiconductor, in Chinese companies as well. People stick to the US because it has a proven track record, but I wouldn't stick with that. Just keep diversifying, even if you lose a bit of return over the next couple of years. It's just a safety net that's important, you know, because as much as you gain over the next couple of years just by investing into American stocks like you see right now, you can also drop and face palm right onto the ground when there is tariffs or anything shaking up the market. For example, I invested in Xiaomi, and my favorite stock. It's been growing so great, and right now it also is dropping again. It dropped back, but I have my gold mine and Xiaomi and a couple health sector stocks that still kept growing over the last couple of weeks and months, even though all my technology stocks are in the red. So it's the diversification which literally keeps you also mentally stable and takes away a lot of the risks. I think I shared everything there is to share for now. If there's any question, okay, nobody's watching, okay, I get it. Anyway, then I'll do my yapping session for my lovely wife. Anyway, what's on my mind right now? It's quite early. I woke up a couple hours ago. I'm still fasting, so nothing eaten or didn't drink. It's Jummah, Friday, so I'll go to the Friday prayer soon. Yeah, anyway, I think Beşiktaş, I'm a Beşiktaş fan. Football for everyone except Americans and Australians. Call it the S word. Anyway, Beşiktaş in Turkey, my favorite team, black and white. I love them so much. You should love them too. I don't care who you are, but Beşiktaş is great. Trust me. Like, if you have the chance to ever watch a game, go. I have, to be honest, I haven't even watched a game myself because I don't live in Istanbul. I live in Germany, so, but the fan base is crazy. I even watched away games when they played against Bayern München once before. Yeah. Anyway, and that was crazy. Like, the stadium, we had a ban of fans, so on paper it said 0 fans from Beşiktaş and 72k from Bayern Munich, but the stadium was cheering for Beşiktaş way more than Bayern Munich. They just smuggled themselves in, I guess. Like, I did it too, so why am I acting like I wasn't part of that? Anyway, yeah, yesterday to Sahur you have to wake up early to eat, and I watched the first half of the Lakers game. Luka was going crazy in the first quarter, and then in the second quarter he was missing everything. That was kind of crazy. Like, he went super cold. Alperen Şengün is the GOAT. Formula 1 starts in next week, and this weekend Ankalaev versus Pereira. To be honest, I like both. You know, a lot of these people are either pro or anti Dagestani. I don't care. I like a lot of fighters. I don't care that much. Either one, they seem like great guys, so may the best fella win. Sorry to my wife who's listening and thinking like, why is he talking about sports? He knows when he talks about stocks or sports, I don't care, but I love him, so I listen. Anyway, I just saw nut mix, like a nut mix. I don't know if Americans have that, but just like a bag of different nuts. Okay, so I'll guess on top of my dome I'll rank nuts. Almonds are like, oh my god, I'm studying health science, so I'm going the healthy route. Let's not go the healthy, let's go enjoyment, because let's say enjoyment, peanuts have to be peanuts, pistachios are like S tier, almonds are A tier. Actually, like, almonds, they're unsalted and with nothing, the best. Not the best, but they're better. If all nuts are unsalted, just natural, whatever, then almonds are the best. They're the ones that I prefer unsalted than not. I don't know what you guys think, but I hate almonds when they're salted or anything, but peanuts and pistachios, oh my god, when they're... Okay, sorry, I stopped. Anyway, what I was trying to say is that pistachios and peanuts salted are great. Anyway, yeah, they're S tier, almonds A tier. What are the nuts? Walnuts, hazelnuts, like B tier. I don't like that much. Actually, I think I'm a bit allergic to hazelnuts, but I still eat them. I don't feel anything. I guess I'm different. Okay, I'll stop. Anyway, yeah, I don't know any other nuts other than
these nuts.
These nuts. I'm sorry. Message of the day, like always, love, peace. Have a nice day. Spread love, joy, peace, gay. Bye.